The session of Visual JForex will be starting afresh for the development of the algorithm using the indicator ROC, the rate of change. This indicator, as the name suggests, measures the rate of change in the price for the underlying instrument, and it expresses the value in terms of the percentage point. So you can have the positive or the negative output depending on the price action. If there is a gain in the price, then of course the output for the ROC will be positive. If there is price decline in the given period of time, then the output will be negative. So that's how this indicator works. And if you want to go into the details of the technical aspects of this indicator, I would suggest that you refer to the earlier video which I had done in the introductory series. In today's session of Visual JForex, the focus is going to be on the functional aspects of this indicator. I have plotted it on the hourly time frame. The instrument is USD JPY, and default value is 10. If you take the block, this is the Visual JForex board which has been developed by the Dukascopy Bank SA. Here you have to define the 4 input parameters depending on which you get the output, and the default value is 10. That simply means the price change over last 10 candle periods will be measured, and it will be expressed in percentage points. And for this session, I'm going to use a different value. Instead of 10, we will be using the value of 12. So that is one difference. So I will change this to 12. Okay. So last 12 hours price change is being retrieved by this indicator for us, and depending on how the price action play has played out, we can decide whether to go for the long trade or to go for a short trade. And the idea behind the algorithms logic execution is fairly simple. We want the buy trades to be executed when we have the ROC value above 0, but on the higher side, on the upper side, we will be limiting the price gains. We don't really want to get involved after a substantial price move has already happened. Only during the initial hours we want to get involved for the exploiting of the initiation of the new change, new trend, and to make sure that is the case, the ROC output for the hourly time period will need to be between 0 and 0.20. 0.20 is in percentage terms, but I will be referring to it as absolute, and I hope you will keep that in mind that it is a percentage value. And for sell trade, we will need the ROC output to be in between 0 to negative 0.2, and along with that, we will be taking the help of 5-minute candlesticks to go for the exact price point. And if we see that the hourly condition is in place, then we will be shifting our focus to look at the price action on the lower time frame. And here, the logic is similar. If the buy condition is there, buy conditions are fulfilled on the hourly time frame, we want the ROC value for the 5-minute, and here also the ROC is being calculated on last 12 candlesticks, and these are of 5 minutes each. That simply means we are comparing the value, output value for the ROC last 5 minutes candles to the output value 1 hour back, and in last 1 hour, if we see that the price rise is there, and if the momentum is shifting on the bullish side, if we see that the output value for ROC is in between 0 to 0.10, then we will be looking to initiate the trade. And here also the upper limit will be defined so as to make sure that we don't execute the trade after a substantial price move has already taken place, and the condition for the sale is also going to be similar. We want to look for the sale trade when we have the ROC output value in between 0 and minus 0.10. Okay, so let us now go back to the Visual JForex board. Here, first thing first, the instrument subscription will need to be carried out, and for that logical blocks are required. The last ask candle instrument will be compared to the default instrument, and it should match. And here we will define the instrument, and this time around we are working with the USD JPY. So we have to search for USD JPY in this listing. Here it is. After that, the position amount needs to be at 0. There should not be any pending or the open position on the account. This I will change to hourly. Shift will be 1. After we have considered the ROC output on the hourly time frame, we also have to make sure that on the lower time frame of 5 minutes, the conditions are in place. We will need the lower time period ROC output as well. Shift 1 and Shift 2. Time period will be changed to 12. And Along with the ROC, we will also have to look at the price action. And for that, our favorite block, info. We will need four of these. One of hourly time period, another one for 5 minutes, and two of 10 seconds. This will be changed to hourly. Like period of 1, this 5 minutes, one, and these two will be 10 seconds each. Like period of 1 and 2 respectively. Okay, so these are the candles which we will take help of. And after that, to make sure there is enough of momentum, we will of course have to define a condition minimum value for the difference between the last hour's candle open and candle close, so as to make sure that we don't get involved when the markets are listless. And this has been the condition which we use for most of the algorithms. And this time around, instead of looking at the candle close and candle open for last candle, we will consider the highest and the lowest point, and the difference should be at least more than 10 pips. A1 into A2. Okay, this variable has the value of 10, and this has been used to multiply with the pip size to arrive at 10 pips. I think I forgot to change the default instrument here. It needs to be changed to USD JPY. Then that instrument will be matched with the last as candle instrument, and candle instrument should be USD JPY. So that's how this is going to work. And also we will consider one more calculation, the actual difference between the highest and the lowest value for last hourly candle. So this is the actual high-low difference. So we have defined these blocks, which are going to be the basic building blocks for our algorithm. Starting with the instrument subscription, these conditions are going to be helpful, and these blocks of ROC will be used to retrieve the rate of change for the underlying instrument, and then we will compare whether the momentum is bullish or bearish, and accordingly we will look to initiate the trade. And as the time is running out, I will be stopping here, and we will resume the working on this algorithm in next session. Thank you all for joining in. Do subscribe to the Dukascopy webinar channel. See you next time. Till then, goodbye.